Hartalega Holdings saw its second quarter FY23 net profit plunge 96.9% to 28.3 million ringgit, hit by a lower average selling price of gloves and sales volume and higher energy costs. Revenue was slashed by 70.9% to 584.56 million ringgit. Net profit for the first half of FY23 fell 96.3% to 116.62 million ringgit, underpinned by a significant contraction in revenue, higher natural gas tariffs and minimum wage. Cumulative revenue plunged by 75.3% to 1.43 billion ringgit. Hartalega CEO Kwan Moon Leong said the group is confident of pulling through the current market challenges as capacity rationalization continues and moves towards equilibrium. He said the group has taken a strategic approach to align its next-generation integrated glove manufacturing complex 1.5 expansion plan with the current market supply and demand dynamics. It is also continuing to reinforce its competitive advantages by ramping up automation to maximize productivity as well as to achieve energy and cost optimization. Looking ahead, he said the group remains positive about the long-term prospects of global glove usage as it is expected to rise in emerging markets with a low glove consumption base, along with heightened hygiene and health awareness. At the close, Hartalega's share price increased 5.1% to 2 ringgit 7 sen, with its market capitalization at almost 7.1 billion ringgit. Heineken Malaysia saw its third quarter FY22 net profit more than double, mainly on improved revenue growth and efficient cost and value initiatives. Quarterly earnings rose 113.13% to 108.74 million ringgit. Meanwhile, top line climbed 84.81% to 720.47 million ringgit due to strong post-COVID recovery, following the reopening of international borders, increased on-trade consumption, as well as positive mix impact from Heineken's premium portfolio growth. Looking ahead, Heineken's Managing Director Roland Bala said the group continues to be cautious on the macroeconomic outlook. This as the market condition remains challenging given the continued pressure from global supply chain disruptions, recessionary pressures from leading economies, rising input cost, the weakening ringgit and rising inflation that could hurt consumer purchasing power. He said the group will remain agile in responding to the volatile business environment and the new market reality, with focus on delivering its evergreen strategy to future-proof the business and continue to invest behind its brands and capabilities. Heineken's share price finished today 0.68% lower to 23 ringgit 44 sen, bringing the group a market capitalization of 7.08 billion ringgit. EcoWorld Development Group subsidiary Hasrat Budi will no longer hold any shares in MySejahtera license holder MySJ. To recap, Antomo Malaysia, which operates the MySejahtera app, and its founder and group CEO Ravindran Ramamurthy were to buy all of Hasrat Budi's shares in MySJ for 24 million ringgit plus a premium at the rate of 10% per annum, calculated from August 27, 2021 until November 2nd, 2022. Ravindran is also a director of MySJ. In a filing with the local bourse today, EcoWorld said the check for the option price has been cleared, and so all shares in MySJ held by its subsidiary will be accordingly retransferred. Hasrat Budi's representatives will also resign as directors of MySJ. The current sole director appointed by Hasrat Budi onto MySJ's board is Tan Sri Liew Kee Sin, who is EcoWorld's chairman. Meanwhile, EcoWorld Executive Director Datuk Hia Kok Boon is Liew's alternate director on MySJ's board. EcoWorld's shares ended today 3.3% lower at 59 sen, valuing the property developer at 1.74 billion ringgit. K&M Group has announced the resignation of its Executive Director and Group CEO Terence Tan Kun Peng effective today. The oil and gas process equipment maker said in a burst filing that Tan is vacating the position to pursue other interests. In his stead, non-independent director Ravindra Singham Balasingham has been redesignated as its executive director and group CEO. Tan had served in the role for over 2 years since his appointment in July 2020, taking over both positions from founder Lee Swee Eng. Tan offloaded his entire shareholding in KNM at the start of 2022, disposing of an aggregate 12.5 million shares or a 0.37% stake. At the close, shares in KNM were unchanged at 4 cents, giving the company a market capitalization of 147.13 million ringgit. National Feedlot Corporation Chairman Datuk Muhammad Saleh Ismail says the company was not able to pay back a 250 million ringgit government loan because Putrajaya had reneged on a deal. Testifying at the Kuala Lumpur High Court today, Saleh said the government was supposed to build slaughterhouses for the Feedlot Centre's operations, but because it failed to do so, NF Corp had no way of generating income in the first place. Additionally, he said the company's accounts were frozen when the first repayments were due in 2011 to 2012. Senior Federal Counsel Nur Hafiza Azizan, who was cross-examining Saleh, then asked him about a meeting he had with then Treasury Secgen Tan Sri Muhammad Irwan Seriga Abdullah at the Finance Ministry on March 18, 2013. According to Saleh, during this meeting, he reached an agreement with Irwan to settle the arrears on the condition that NF Corp was sold and that they had a potential buyer waiting. At this point, Judge Anand Ponudurai asked Saleh for clarification, as the agreement letter does not say that the repayment was conditional. In response, Saleh, the husband of former Wanita UMNO chief Tan Sri Shahriza Abdul Jalil, said that NF Corp did not have any intention to run away and that it did intend to repay the loan. Nur Hafiza, however, noted that it was not stated in the agreement letter that the loan repayment was conditional.